Okay, as promised, part two on oil and gas. Uh, but first, a disclaimer: I am not your financial guru. I'm just a guy that likes watching and observing markets. That's all. And if you're looking for a guru, I suggest going to Tibet or reading a book by the Dalai Lama or someone else who is spiritually enlightened. With that being said, let's have a little delve on Dow. So this is a Dow Jones Industrial Average. Remember when it used to be only industrial companies, right? And then you had transports, so physical goods being produced in the industrials, and then the transports, uh, moving those goods around the country, right? Rail stocks, etc. So that's why the Dow theory was like, if the Dow Jones is going up, but the Dow Transports is going down, that means our divergence in the underlying economy. And if you're gambling, speculating on Dow Jones stocks, industrial stocks, and transport stocks are going down, then you're doing something wrong. Could be a sell signal. Let's look at transports. They should not be a big factor, right, in this index. Nasdaq transportation. Oh, that's a new one. Dow transports. I want Dow transports. Dow trannies. Stock. Oh god. See what happens when you don't really pay attention to stocks. Oh. Transportation index. Maybe it did get merged into that Nasdaq. Maybe it's a high-tech transport index you should be following. So, yeah, this could be interesting to look up, right? What's in it? But yeah, like Dow Jones Industrials, I guess it got named after the company, Dow Chemical. So let's start off with that part two of this oil and gas exploration discovery. Dow Inc. Here we go. Or not. Why is this only 2019? What is going on? It's Dow. Yeah, NYSE. Something happened here. Because this is a centuries old business. What could have happened to this stock? I wish TradingView had like an index, or you just click on the index and just list all the companies. Maybe it does. Maybe it does. Use data window. Hot list calendar. Economic. Oh, this is good. I'm learning some stuff here. Right. Public chats. Nope. Streams. Nope. Object chain. Ooh. DOM. I think that's the market orders, right? Ooh, this is cool to look at. Is Dow trading? Why? Order panel. Connected broker. There's some good tools here that you need to play around with. But okay, I just wasted a few minutes of time, but it's always good to explore the tools available to you. So Dow Jones, Dow Inc. It's got a inverse head and shoulders. You could draw a line here, and where would you draw it? You could draw it like an angled. Why not? If you want to be pure, do it up here. We'll give it a bigger head, right? Do you like big heads? Rough, and a candle. 21, 55, 34, $89, $90. Okay, $90. You can just kind of track that, right? $90 up here, roughly. When whoa, this year. It's not too bad, is it? Not too bad indeed. Okay, so something happened here. Because why isn't it giving me all the data? Did it? Could it possibly split or merged with another company? Who would Dow Jones Petrochemical Company merge with? Uh, DuPont? Only other company that's large enough. DuPont Nemours Inc. I think these guys, East Coast, right? I think they're Delaware, maybe Wilmington headquarters. Maybe they merged. You guys will have to look it up. Again, do your own research. I'm just a dude looking at stuff, right? Just a dude looking at stuff. A voyeur of the markets. So there we go. Let's. DuPont's an old company. Is it a company, right? It's family based, I believe. Oh man, look at these wild swings. $5, 18. This is this is interesting, right? This is Reagan Recovery Act, right? So stuff was you had a double dip recession, right? 80, 82. And DuPont kind of mirrored that. Also, it caught the 70s hyperinflation. Call it hyperinflation, but yeah, petrochemicals, gold, everything was going through the roof, right? Inflation wise. And then now you had a double dip recession, and it's like, okay, it's time to build up the economy. It's time to, go Reaganomics on you. And what was Reaganomics? It's kind of low tax, basically, I believe, because you had two double dip recessions. You had a stagflation decade here, and now is ready for boom time. 80s was boom time, right? You had WWE, Hulk Hogan. Look at all the TV shows. The TV kind of represents the mood of the nation, right? A team, everyone was happy, spending money, traveling. So look, 5, 6, 30. That's a good catch, right? Good catch. And during this is really good stock to give some history on, right? And because I was only like 6, 7, 8, 9 years old during this period, but I do remember the crash because it made international news, right? And there was a hurricane in England around that time, which is we don't get hurricanes, right? Ever. Maybe we've had like two in the last 50 years, right? We had storms and stuff, but hurricane, no. So it's weird how that coincided with a 25% drop on SPY. But DuPont, solid company. I mean, yeah, it took a big dip, 30%, but came right back up. And then this was the Gulf War. So obviously, petrochemical company, DuPont, right? Yeah, it suffered. But then when the market realized what was going on in Iraq, we had good growth, good growth. And probably these guys probably positioned themselves well, right? Maybe they influenced the politicians to go out there and get some of that oil from Mr. Evil Saddam. You cannot have that oil. We must have it. Oh boy. Is it conspiracy theories when you can go back in time and just look at how things played out? No, it's not. It's not a conspiracy. You can just see where the money flows, and it's been flowing into the DuPont. Oh wait, GFC. So this is all 2 decades basically of good growth. More. right? 5 up to 80. Uh, Imagine you got 1,000 shares at 5, or let's say 8, be $8, right? 1,000 shares, $8, $8,000, right? 10x it. That's 80 grand. But with dividends, okay, let's go back to weekly and let's try and get some dividend action for you. So now I would have to do daily. Sorry, it's not terribly exciting, but it is when you start realizing, like I showed you on, was it Valero, how just buying and holding in some of these great companies. Okay, what's this say? Share split 2-for-1. So you got double your shares, right? So the market had to digest and look, cut in half, right? So this downward draft, you think you're losing money? No, it's not. It's not at all. It's just market repricing to the share split. That's all. And now here we go. Dividends start flowing in. 25 cents. What was our initial buy? $8. So you're getting paid $1 a year. That's 25%, I believe. $1 a year on $8. No, what is that? It's more than 10%. It's around 12, 13%, right? So next 4 should be. See, in a year when it started, March 25th, March 25th, 1977, 25 cents. Within the second dividend payment, 3 months later, it's already gone up 30, 30. Sorry, trying to be kind of. So less what after a year, another 2 years. I mean, 1, 2, 3, 4. Look at this growth. 1, 2, no, 2. On December, here, 1, 2, 3, 4, right? 35. 1, 2, 3, 4. 45. 1, 2, 3, 4. 45 again. 1, 2, 3, 4. 45. Is this boring, you guys? I hope not. These are powerful investing lessons, right? 1, 2, 3, 4. 45. Okay, consistent. So what's that now? 90, 180, $1.80. You get paid $1.80 a year, which is 25% income on your $8,000 investment. What was that? Maybe a decade ago now. 50 cents, 55 cents, 70 cents. 1, 2, 3, 4. Okay, 65. 65. This what is driving the profits and incomes, and the dividend payouts are driving the share price. They all go hand in hand, right? 65. I bet we hit $1 before the decade's out. Do you think so? 65. 75. We're getting there. 75. 87. We're close. 1, 2, 2, 3, 4. Earnings. I want dividend. 87. Ooh, can we make it? Can we make it? So the last payout, right? 87. Oh, close. But what is that? 87 times 4. 163, 20, 350. $3.50. Yeah, it's a long wait, but you can pay to wait, right? Remember, we bought it for $8 a share. Each share is now giving you $3.50 in income. Beautiful stuff. Okay, when do we get to $1? Then I'm going to call it on this video. Dividends. What happened? Maybe that's a one-off dividend. Maybe we had a share split or something. Why is dividends? Oh, this is post 9/11. Obviously, yeah. Everything's getting crushed, right? We're in a recession, so they cut the dividend. But now we're in recovery mode. 34. When do we get to $1? 34. 34. Okay. 42. 42. So we're recovering now, right? Then we've got another crash. 2009-8 GFC. Dividend 15. 25. Will we get to our dollar level quarterly payout? Big surprise there. Now the recovery's kind of was post GFC, was that really a recovery in the economy? Asset prices went up, but did the economy as a whole really do well? We got double dividends here. 46, June 28, and 46. And a month later, little bonus for you. Another double dividend. DuPont's just giving out money to his shareholders. Dividends 14. Share split 3, a third. Share split a third. It's not 2 for 1. You're getting it's like less shares. They're buying back, maybe. I think. So why did the price go down? Maybe it's running into trouble now. Maybe this is what brought on. This must be where it bought Dow, right? Dow. This is what. Okay, this kind of makes sense now. No, we're not going to get to our dollar. But I think you got a free company, right? I think you got Dow Jones Company, which is kind of a dividend because if you own DuPont, somebody tell me, put in a comment if you know. This is a huge dividend, right? If you own DuPont, did you just get a $64 share as a special payout? Wow, which is going to 90. Wow. I did pick up a few names, oil and gas names. So I don't want to do a third video on oil and gas. I'm boring myself. Lyndon Bassel. Let's look at the chart. Weekly, quickly. Been a good one. New company. Okay. It's like if it forms another shoulder, maybe it might go real high. Look at these numbers up here. It's already at 105. Okay, Lyndon Bassel, pretty good. EPD, Enterprise Products. Well, do they pay a dividend? Can I find you a dividend payer? 45. It's paying $2 a share, 10% a year. Not bad. Oops, I'm running out of time. Okay, and I've got one more. OKE. Okay, my time's up. But this could be good as well. I have to look at a chart.